All right, folks, we're going back here to the Diagnostic Trading Hour. And let's see where we're at right now. Basically, all I got to say is, boom, the markets are moving. We got S&P down 42 points. We got the Russell down 9. We got the NASDAQ down 81 points. And the Dow down 345. Yes, I said 345. 2% drops in a single day in the markets. And they aren't looking at letting up. And it's going. We've been talking about it. We've been waiting for it. We've been wanting that volatility. If you are not trading this volatility, you are missing out. So it has been fantastic. We got a little bit of movement going on over in the metal markets right now. They're a bit quieter. So, but still plenty of them. We got copper. It moved 2%. So actually, it's really loud. But we got gold right now. It's up about $9 on the day. We got silver. It's up a little bit as well, up about 0.5%. Oil currently is down about 20 cents on the day. Had moved down, pulled on back up. We got natural gas. Looking at that, it has moved almost 1% on the day, down on the downside now. We got corn and soybeans. Corn is down about $4, down over 1%. Soybeans pretty flat on the day, it's down 1 point. We got a pound dollar down 2 pips. We got the euro pound is up 79, which is a 1% move on euro pound is a massive move, okay? Massive move there. Dollar franc is currently down 117 pips. 117 pips. I mean, you'd think it's NFP day, you know? We got dollar yen down $1.09. We got the euro yen down 10 pips. We got the Aussie yen down 30. Aussie dollar currently up 50 pips on the day. Looking on over at the bonds. Bonds are up over 2%. Massive moves going on. And the U.S. data just really, slamming the markets across the board. Looking at the dollar index, it is down. King dollar is actually feeling a little bit of weakness, but the markets are falling with it. And also that's what pushed up a little bit on your gold and your silver, making them cost a little bit more as the dollar gets a little bit weaker. So pretty obvious there. It takes more dollars to buy it. Euro dollar currently right now is up 119 pips. So, again, beautiful markets today. Some of our energies are a little bit slower out of the group, but that's why I like to have a little mix and trade, look at some energies, look at some metals, look at some ags, look at some FX, and look at some indices, at least like one from every group. So that way, something's always moving today. A lot is moving. And these are, you can't ask for better volatility. So with that in mind, let's do a couple quick reviews on some trades. We'll go back, and after we do the reviews, we'll go in and talk a little bit more about where everything's currently sitting at and some potential plans, what we're looking at going forward on this. But right now, just to get you caught up on what's been happening here, we got to go through the MVP trades with you every day, and they've been doing well. Let me see, day after day after day for us. Got a nice long trade there again, Aussie dollar last night. And we just seem to do these every night, and they just are doing really, obviously some don't always make it, but you can spread them out. But anyways, had a little short, sort of went flat there. Would have been a nice little flat, premium collection trade. But then we had a nice long that definitely ran up a little bit later, just after midnight, and started heading on back down on the euro yen. Looking on over at the euro dollar, been headed on down pretty much like right at the open there at 6 o'clock, and moved down. Plenty of time for you to go in and take some profits on that one. And let's see here. Scrolling on over to the pound yen. On the pound yen right here, basically it's pretty flat, premium collection at best move right there in the evening, but then turned around and gave us a nice long right there around, 11:30. So some, good, nice long trade on that. And then going into oil, oil has had some decent elite moves and ran on up and early in the morning. Just up, and then started chilling out right up here, which is about a 1 deviation move. We were actually right at a 1 deviation move when this trade happened. So we'd be looking for the market to look at its turnaround. Had profit poppers all the way up that were all profitable. Anyways, going on down, turning back around right there, and giving us a potential MVP reversal, but really just to set up at the 1 deviation to go short, and it does. It pulls on back down. Now trying to pull on back up to settlement right there on oil. NASDAQ, let's see here. It was a little bit choppy, but again, we still had plenty of movement on it. It's just been a really wild ride. And let's just bring that chart up on that 10-minute chart. Get a little bit cleaner here. Get up to date. But, it basically went up there, sort of had a big pullback after it dropped down. So it was a smooth trend early in the morning, right to about 9:30, 9:40. Then it just popped back up, almost a full deviation back up to 0.5 from the negative 1.5. And then it could not hold it and just let it go. And but with some big, wild swings in that process, now sitting down at 1.5 deviations on the day. So just some big, wild moves there. Let's see here. Going on into the S&P, we had some nice elite moves on that. And a reversal as well, so going short, short, short. Got an MVP reversal going, go long, grab that. Then it turns on back around, pulling back down to 1.5. Cannot it's trying to get away, but it keeps pushing on down there. We got gold right now. Gold checking that out. And even though not just being a massively volatile day on it, it's been a really smooth trend we got all morning. Got it straight up to the 1 deviation level. Again, day after day after day. I post these things in advance at 8:30 p.m. Eastern time at night. So you can grab them right there inside the scanner. And you can see right at 1 deviation and just chilling out. So obviously you might get an idea of where a profit target might be if you got a long or a short, right? You also might know where you want to tighten those stops and where to start looking for potential reversals. We got the Russell. It went into a little bit of chop. But still gave some great profit poppers all the way down. And a little bit of chop right there on the regular 14-tick chart. May have to tighten that thing down. Just going so volatile crazy. Let me go ahead and pull up a 10-minute chart on the Russell. That may clean it up a little bit for you. And so let's go on down here and load that up. And but like I said, they're all down. Dow especially getting just slammed. But right there, so let me pull that one. There we go. And sort of the same thing. We had a great clean trend. It fired down hard. Massive volume right there, right on the open. And then just spiked, went the other direction all the way back up to settlement. Full 1.5 deviation reversal. Pop settlement. Comes right back down, right down to 1 deviation. Starts dancing between the negative 0.7 and the negative 1 deviation levels. And just sitting right there basically at a -1 deviation level for the day. So really clean, early morning really where all this stuff started, you can see where it really started picking on up. Looking on over at the DAX, and we'll pull that one up real quick. And just some great down moves earlier this morning. DAX just getting nailed along with everything else, riding that all the way in to the -1.5 deviation level. So anyway, so what all news happened this morning, right? And we had some news, potential plans, and all that stuff. A lot of this, climate count change came in negative 18.6, worse than the negative 34 they thought they would have. We had average earnings index on the pound there at 0.7, came in as expected. Unemployment rate was actually a little bit better on the pound than expected overall. But then when the U.S. came out with this onslaught of news, now notice, I want you to notice though, okay, so this, everybody's going to be blaming all this on the news. But, let's look at this. And we're seeing a lot of these movements. Let me just pull up the charts. We're seeing a lot of these movements happening before the news came out. Okay, now the news definitely did not help because we got another deviation move off of it. But we were already heading south going into the news. There's the Russell for you if we go into, let's pull up the Dow. Get the Dow on up. Look at that. And just basically what we had is we had core retail sales come in way worse than expected at negative 0.2. But check it out. All these U.S. numbers came out at 8:30. And the market was already down about 0.7 deviations before that even came out. So somebody obviously had a clue. But so 8:30 right there, right here, market was already down quite a bit, and then it just got slammed right at the end of the day. But PPI came out, retail sales came out. What do all these numbers mean? Why does the market care so much? Okay, well, core retail sales, that's the total value of sales at the retail level without automobiles. And it's declining. They thought it would actually be improving, not so much over the last report, but they were expecting it to, be an increase of 0.2%. And if you look back at, let's see, we're in October. Look back at last October, we were at 0.4%. So let's see on the October release. And on this October release, we're down negative 0.2%. We're lower than expectations. We're lower than the last release in September. So that number in every way is very negative. It shows that spending is slowing down. Going into PPI, that's price of finished goods and services sold. And that's also showing that prices are going down. That's deflationary in the middle of everything. We got retail sales. That's the total value of retail sales that come on out. And that was down at a negative 3.3% on an expectation of 0.1. You can see all this. I mean, here's one useful website, retail sales. It goes into it, sort of talks about it a little bit. We got the core PPI also came in worse than expected. I mean, it was just look at all this red right here on the U.S. And then, Empire State Manufacturing Index came in at 6.2 on an expectation of 20.3. And, you had a couple, small impact reports that came out better than expected. Yay, right? But and then now we got Draghi. He's going to come out, and he wants to put some fuel on the fire. So he's going to go ahead and talk at 2 o'clock. He's like, you know what? I think we need a little bit more volatility today. I think I'll come out and make a speech. So he's coming out at 2 o'clock. He's going to be speaking at the European Cultural Day 2014 event, which is organized by the European Central Bank, which he's the head of, and that'll be in Frankfurt, Germany. So expect some volatility as little reports come out on that as well. And anyways, but just lots of volatility. We've been talking about the volatility. We've been talking about the VIX going up, and getting all that big movement. If I go over here and I pull up the VIX, I mean, look at this. I mean, this is just a pretty picture. And, if you're a trader, you love volatility, or you'll learn to love it. But we're right here up at 29. If I back this on out, let's back it out a little bit. Let's look at weeks here. And we just passed all the volatility from 2013, all the volatility from 2012. We're now in 2011 territory, which was a very volatile time. And we're just going to keep it going, right? So, but anyways, enjoy that volatility. That's going to pump up your premium. It's going to make your in-the-money binaries easier. It's going to pump up your premium on all your options. And it doesn't look like it's going backwards. So we'll just keep riding. We'll talk more when we get back right after this break. All right, everybody, welcome back here to the Diagnostic Trading Hour. And so we're checking out where everything's at right now. So, again, we got Draghi coming up. He's going to be talking a little bit later. There's several things to watch for when he comes out and has his little talks. So basically, there's all these little major events. He spoke earlier today, limited his comments on the bank supervision data. So he probably would have said something major then if he had something to say. This is not likely a big firework event because it's at a cultural day event by the ECB. So, but anyway, so you never know what he might say, but, based on just looking at everything around that, it looks like that there may be nothing to be said. Okay, so let's see here. We'll knock that one out. What else do we got that you want to be aware of? So obviously stocks and bond yields and all that in Europe are just getting wiped out. U.S. stocks, just taking a dive with everything that's going on. And you see the Dow down at -2 deviations today. And we're just seeing incredible volatility. We got stocks and Euro bonds getting taken out there. We got a Europe share, biggest slide, I think, now in 3 years. So, it's really getting hammered. Let's see here. A lot of the commodities have been sinking down, but it says led by metal declines. I don't really see that, considering metal is up today. Gold moving on up to $12.50. Dollar moving down to a 3-week low. And so a lot of people think that might be a delayed Fed rate hike. We'll see how that goes. So let's go ahead and check out today's news specifically. And we had some, pretty big moves. So that would have made any kind of iron condors pretty difficult to pull off. And again, a lot of these we're not able to get filled on. But with the implied volatility picking up, it is going to make it a little bit easier to get filled on some of these trades now, which is nice. And some of them, just make sure, the big thing I always teach, make sure you're going in, make sure you're using those stops, okay, to hop out of the trade if it does move against you on that. And let's see, what do we had? We were basically looking at all these reports, and we just had some massive moves off of between 8 and 10. So just taking a quick look Obviously, if you look at any chart, you can tell that it took off. And if you did not use stops, you would have definitely been regretful. That's why I have that stop plug function to help you out on that. But anyway, so we had CAD manufacturing sales. We had U.S. industrial production. We also had the U.S. Philly Fed manufacturing index. So this kind of volatility comes up. We're going to have to flip everything around and start going into strangles and straddles if that keeps going. Tomorrow we got the CAD core CPI, the CPI, and U.S. building permits are going to be, that's going to be released on Friday. Tomorrow we got CAD manufacturing sales, U.S. industrial production, and U.S. Philly Fed. We had a variety of reports coming out this morning, and usually we get a 30-pip move. Obviously, we got a bit more than a 30-pip move this morning. And definitely, like I said, use those stops or else they will hurt. But if you use the stops, then, when you have a week or two like this where things go crazy, or you may even back off a little bit when things go crazy. We also have European final CPI coming out tonight at 5 a.m. Normal iron condor on that, $35, entering at 11 p.m. for a 7 a.m. expiration. Of course, nothing has been normal lately. Today, actually busting three deviations, literally three deviations on euro-dollar. Look at this. We went right up to it, tripped the 3 deviation mark, and pulled on back to 1.5, a deviation and a half pullback, along with a pop back up to 2 deviations. So some massive, look at that right there. You can't get a better trend. It's like up, right? And then, massive volume spikes happening over here. I'm pulling 6E volume, by the way, on this. 40,000 contracts in 10 minutes, 45,000, 46,000 contracts in the next 10 minutes. And then it pulls on back down, volume starts declining, and then we go into, flat, choppy territory for the rest of the day. Definitely this was the money right here, right in these early morning hours. And we've been seeing a lot of that big move happening in the European sessions. And it started this summer, and it's just progressively got bigger and bigger and bigger as it has progressed on. Don't forget, oil inventory is going to be coming out tomorrow, not today, due to the holiday on Monday, the bank and Fed holiday on Monday, Columbus Day. So they bumped back weekly oil inventory to tomorrow. Natural gas inventory also coming out tomorrow. Tonight we got a New Zealand Business Manufacturing Index at 5:30. Could impact the Aussie when it opens on up. We also got the Aussie inflation expectations coming out at 8 o'clock. Not a news trade, but could have some impact. And then tomorrow morning, Draghi is doing his road show, and he'll be talking a little bit again, along with German President Wiedmann at 6 a.m. All right, stay there. We'll be back after this break. All right, folks, we're back here to the Diagnostic Trading Hour. And so we're going to go through and look at several things, but first I wanted to go through and just make sure you had all that news caught up. I think we got you caught up on the news. Next day we got to dive into here is just looking at the plans. We're checking out S&P. Was looking for some down moves and had targets pretty far down, so I want to start off on that. We'll go in and look at the S&P. Let's see here. So we're going on down, 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 and I was looking at a sell at 1900 there, and obviously we never got up to 1900 to get that sell. At another sell down at 1884, and market pulled on back up to about 1882.5, and then but didn't quite hit 1884 for me. Wasn't able to grab that one, and as it moved on down, had a sell at 1855. Finally was able to hop in on a trade. Market hopped on down. I was looking at 1855, taking profit at 1850, then at 1840. On that trade, and it looks like that's about as low as I had on my plan list, and we went down to about 1840, which wasn't bad considering the market ran all the way back up to 1861, which gave me another entry on my 1855, hopping on that, going down to 1850, then 1840 again, and at that point, basically just tightening my stops or getting out, and of course the market kept on going, which I didn't expect, but that's okay. Nice, good, profitable trades. Let's see here, and it's going down. Let's look at the Russell. I had some pretty low markers on the Russell for today. Had multiple targets to keep basically trailing it down. That's going to jump too soon. But let's see here, going down to the Russell. There we go. All right. So pulling on the Russell on up and had some pretty big moves down that I was looking for. And was hoping for hopefully a hit up at 1073. but didn't quite get that one. Had a couple different selling opportunities along the way. I was looking for a break higher, 1075.73 as support, and move on, possibly up to 1087. We didn't get that move up, so that knocked that out. Would have been a selling opportunity up at 1091 if we would have had it. So still, this plan is valid. I'll be using it in the future. Failure to break that resistance, 1073.75. Obviously can push a move easily on down to 1060. That was settlement. And then on down to 1061. Let's see here. Then from there, I was looking at 1054. And then trailing down 1047, trailing down 1041, trailing down 1034 would be the next possible trail down. But it looks like 1041 pretty much called it, and it bounced on back on up, hit 1060 again, gave that second 1060, actually 1061 was the entry to go short, and basically that's the trade. So basically it's 1061, writing it down to 1040, and it looks like we may get down to that 1041 again twice, so maybe able to do this trade 2 times. All right, going on down, looking over at the Aussie, and let's check that one out. Everything's been so slammed. Aussie has had a pretty rough time as of late, and let's see here. There we go. And basically, I've just been looking to sell into any rallies on the Aussie as it moves up and check out any potential selling opportunities. Haven't really been looking to go long on it, and see as it climbed up and just gave it all back. And had to sell up at 88.05, and that would have came on up as it came on back down off the 280 deviation level, closed below the bar. Then 88.05 right there, hit 88.30. And for a stop would be the stop basically after it broke below the low once it hit 88.05. So we hit 88.05 in this bar right here. Once it broke below in this bar. This is where a short is. Now we have a stop up at 88.30, but we're short here. And then we go on down to 87.80. And, you can keep writing it down from there. The next prices below 87.80 are going to be 87.55 to go short at 87.55. So it didn't quite get that. Took profit, came down, came on back up, hit 87.55 a little bit later in the day on the way back down, and was able to go down and hit 87.30. And so we moved down. We just hit that take profit right there. And so I'd be out of the trade at the moment and bouncing right off settlement potentially. I really won't have another sell until we get all the way down to 86.30 over on the Aussie dollar. Diving on into the euro dollar. Let me pull that on up and see where we're at. Okay, so on the euro dollar, we obviously still, we got, again, I'm selling into rallies on the euro dollar. It's been getting cremated really hard. So as it flew on up, basically looking for it to do a break below when it hits one of these prices. So first I was looking for a 26.80, but we didn't get a break below on that. Kept moving up. Basically didn't get a break below a low bar all the way up this morning. Then finally we start getting breaks below, so we can go up here, and my highest level is going to be 27.50. So I'm going to go in at 27.50. I'm going to take profit at 27.30. And we're still waiting. I want to say still waiting on that 27.30. So it came down. It's been oscillating right now off that 27.50 short. And really have all my other ones are down below it. I didn't have longs. I wish I would have caught that long on euro dollar. Didn't have that in my day trading plan today. Worked great on the MVP 10-minute system. That was, a perfect call on the long early this morning as well. And really early mornings and evenings. I've been loving that 10-minute MVP. But it just took off, came on back, and so sort of really in shop territory probably for the rest of the day. Let's look at a few of our other forecasts here. We got gold, and the gold forecast I was looking at. Let's see how that did, and let's see if there's anything left in it. We're looking at a buy on gold at 12.38 with targets at 12.41, 44, 49, and 53. So we obviously hit that 12.38 level right here, and boom, pops it, comes back. We get an entry right here, goes long. We're able to take that up to 12.41 right before the 0.5 deviation level. Then we're able to go to 12.44.2 before the 0.7. And then the next level takes us up to 12.49. We're able to hit that. We don't hit the final target of 12.53, but we hit the first 3 take profit targets on that. As far as the downside, we'd be looking for sell at 12.32 below settlement, and we have not had that pop back down since that happened yet. And then we also have the 12.19 buy if it were to drop far enough down, and almost got that in the overnight, but did not get the 12.19 overnight sell. All right, well, that captures gold. Looking on over at crude, and what we got going on in the crude markets. On the crude markets, we got basically lots of sells going on here. I'm looking at, I had to sell it up at 83.60, never got to that one. I also sell it up at 84.60, never got to that one. The other sell plan I had was at 81, and we did obviously hit that 81. We hit that right here, and I was taking that on down. First target being $80.80. We hit that first target. Next target being $80.40. We hit the second target. Third target being 80.20. We hit that target. Final target being 79.70. Didn't hit the fourth target, but did get the first three targets out of that trade while trailing their stops on down. So the trade worked out pretty well, and popped on back up. By the way, gave another short at 81 just now and could write it on back down again to 80.80, 80.40, and 80.20 would be the next three goals on the way back down. Needs to break. Just now hit 81, okay? So keep that in mind. Just hit 81 right here. We broke below the low. That's going to put our stop, by the way, up at 82. So that is a pretty wide stop, by the way. And you really want to keep that in mind when you're looking at this trade. Okay? Just pretty big stops to be able to do these trades on oil. Whenever markets, this is one of the lessons that are really important, is when markets get really volatile, you want to lower your size. And that's the hard part about traders who are doing like one contract at a time. You can't really go lower. I mean, if you're on futures, you can go to minis maybe, or maybe you can go over to Nadex, you can go to ones. But at a certain point, you can't go lower than one, right? And so, it's not, once you start getting the size, when it's less volatile, you're trading a little more size. When it's more volatile, you're trading a little less size because you're getting bigger moves. So you don't need, two contracts to make the same amount of money in a small move as you can get in one contract with a big move. And just really leveling off that size. And the easiest way to do that is basically go, how much am I willing to risk per, or as a minimum or maximum per order, and then divide that divides what is your, minimum risk per single contract based on your entry and stop loss, and then that will let you automatically be able to adjust your position size. But yeah, that's a pretty massively wide stop there. Okay, so going on over here, looking at the U.S. yen, and let's pull that one on up for you. Go right on down here. Let me pull it up. I think I went the wrong direction. Okay, so right here, the U.S. yen, we'll check that out. And then we'll go to the pound dollar for you as well. So right here on the U.S. yen, what we're looking at is mainly, it's been like very bullish. We've been looking for a bullish, it hadn't been bullish, but we've been looking for it to find some support and finally turn around and potentially, looking for some struggle, possibly potential territory. So anyway, so some of the potential long trades never got the setup in place. I was looking at potential longs at 107.70, never broke 107.70. I was looking at long trades at 106.80. It did hit 106.80, but I needed to break a high after it hit it. So it moved on down here, and we didn't get to 106.80 till this bar, and so we needed to break a high, and it just literally moved down, 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 down. So never really got a chance to take the 106.80 trade. It actually went below the stop before we even got a chance to get in the trade. So that knocked out the 106.80 as a potential buy trade there. And let's see what else we got. The only potential short trade we could get on here is if I broke. I had one trade. I forgot to put it on here. I had one trade that if we broke the 106.50, like I would have had a 106.50 stop if I ever would have got triggered on the 106.80 to go long. Then I would have had a short down to 106.10. And so, that 106.50 down to 106.10, that trade did happen. But at least that, was filled as far as market actions go. But we just, pretty small moves there. Massive moves as far as like after the price level was hit. Massive move there to the 3 deviation level, basically calling, hey, this is going to happen, once every 100 days type thing. And really rare, but boom, it just hits it just like the euro dollar did. All right, let's go ahead. Let's dive on into the pound dollar and see where we're at on what other levels we got going on here on the pound. And all right, so on the pound dollar, we got lots of sell trades. I've been very short on the pound dollar. And so looking at selling into rallies across the board. And was looking at a 60.70 and a 61.10 and a 58.25. Haven't quite hit the 58.25 yet. If we do hit that tonight, I'll be looking at that one at 58.25 with a stop at 58.65. Taking have 3 profit targets below at 58.05. 65 and 57.20. So if you want to know what is on the pound dollar, if the market continues to drop, that's what I will be looking at. On the way up, I was looking at sells at 60.70 and 61.10. They were really high up there. Just as potential selling opportunities into the market, really a no man's land in between, just following MVP 10 minutes beyond that. So the advanced plan combined with the MVP 10 minutes gave you plenty of trades. But so far, the advanced plan right there on that one, like I said, we had basically sells above where the market even reached. We have sells below the market, and in between, just doing the MVP 10 minutes to look at potential trades there. And so we got to buy literally right as it took off. So aqua being the potential, green being the entry order. Whenever it breaks that high, it breaks it, boom, it pops up, and it's going. So anyways, some pretty sweet moves there on the pound dollar. And let's see, I think I may have had one more. I'm trying to scale through all this information for you, do it fast for you while we got time on the radio. The only other trade I had on here was I had a 59.50 short with a take profit at 59.10. Let's see here. And so right there we had a 59.50 short, and we had take profit down at 59.10, which has just been hit right there above settlement. It's actually popped back up to it at the moment, and we had a stop at 59.90. So if it pops on up there again at 59.50, you could decide to potentially do that trade a second time as well, okay? Additional targets can always be layered down at other deviation levels. You can always have a few targets if you're looking at them. You know, we look at targets, and basically target 1, 59.10 being right there above settlement. You could have a target 2 at 58.70, and you could have a target 3 at 58.60, just because you could, add additional targets just at those deviation levels. Not hard to put those in there, especially if there's no other, potential buy trades in the way in the process of doing that. But, and I would not, again, make sure when you're entering the trade that it breaks below the bar that hits that trigger price. All right, welcome on back here to the Diagnostic Trading Hour. So that's our market plan wrap. And I got you all cut up there, and with a few trades even to look into the overnight session that you might be able to take advantage of. And I'll be getting you your news plan ready to go tomorrow. Let's see here. I need to make sure to get that on up and running. Let's see here. 1 second. I'll pull that up for you. Okay, and let's see. I just do a quick recap for you. Make sure you are ready for tomorrow. We got CAD manufacturing sales coming out 8 to 10 a.m. Normally, that is a $25 one. We've had some crazy volatility lately. But tomorrow we have a lot of these reports that usually are pretty flat. 8 a.m. to 10 a.m. for a minimum profit of $25 in the CAD manufacturing sales. They're trading the dollar CAD. If we scroll on over to U.S. industrial production, we're looking at euro dollar. We're looking at 8 a.m. to 10 a.m., 8 a.m. entry, 10 a.m. expiration, and looking for a minimum profit of $30 on the trade, doing an iron condor buying the lower spread and selling the upper spread. We also have another euro dollar trade that you can enter at 9 o'clock for an 11 a.m. for a $25 minimum take profit trade on the euro dollar, trading the U.S. Philly Fed Manufacturing Index, usually a very small release. We'll have spike strikers on unemployment claims. We got weekly oil inventory report. Be careful on those ranges. Tomorrow will be a little bit different with not usually having oil inventory on Thursdays. Weekly natural gas will be the same time as always right there. And so that'll be coming out, and look for your spike strikers and your oil inventories on that. We also have another report to be aware of. The NAHB Housing Market Index will come out at 10 a.m. Could cause a little market volatility. Nothing major usually. And early in the morning, 6 a.m., if you're trading the euro, we got the German Bubba president, Whiteman, will be speaking at 6 a.m. And then we got some earnings releases. We got Google coming up tomorrow. Expected wire release time is 4 o'clock, even though the conference call may not happen until 4:15, 4:30, 4:45, whatever. The wire usually comes out right at 4 o'clock. So we'll be checking out some potential Google U.S. Tech 100 NADEC trades tomorrow that we might be able to put on. Sometimes I can put them on during the show. Sometimes I can't. It depends upon where the pricing is. And I'll usually put on some during the show and then a whole lot more later. But at least walk you through some ideas on how to trade Google on the NASDAQ U.S. Tech 100 release, okay? So a pretty simple way. It's a cool trade. I do it just about I do it every quarter. And so we'll be looking at that as the main topic of our show tomorrow. But we'll go through to our regular reports and all that stuff as well. But, bring something new to you, something to look forward to. Walking on into the end of the week, we'll have some more earnings releases coming out on GE there on the Dow Jones. Comes out in the morning at 6:30. We got the CAD Core CPI Iron Condor for $30 on Friday. We got the U.S. building permits Euro Dollar Iron Condor for 8 a.m. to 10 a.m. for $25 on Friday. Yellen will be doing a nice little speech at 8:30 in the morning on Friday as well, so definitely be aware of that, along with University of Michigan Consumer Sentiment Report and our regular, weekly crop progress reports for you ag traders out there that want to keep an eye on that. As far as earnings coming out next week, the ones we got on the list, we got IBM coming out on Monday. We got Apple coming out on Monday as well. And then on Tuesday, it's going to be loaded up with McDonald's, Coca-Cola, Verizon, and United Technologies all being released. Going into Wednesday next week, Boeing coming out on the Dow, and AT&T is coming out. Then we'll go into Thursday. We're going to have Comcast coming out on the NASDAQ there, and we'll have Microsoft and Amazon both being released next Thursday. On the 24th, we'll be looking at Procter & Gamble. That'll be your main top earnings plays going into the next week in the big indices, the heavy hitters. Y'all have a great day, and I'll see you tomorrow right here on the Diagnostic Trading Hour.